So let's cover Disney. And now Disney has had some very bizarre stuff. They've had, what is it, 8 movies? Their 8 most recent movies are just absolute bombs in the box office. They are just tanking. Nobody wanted to see the Little Mermaid remix. The remix that they're making right now of Snow White looks like it's going to be a total bomb as well. They've had a few others. There was an animated movie. Gosh, it wasn't, was it Emotions? But anyway, check this out. Bob Iger of Disney put roughly a third of the company up for sale this week per Bloomberg, declaring Disney's linear TV assets non-core. That includes networks like ABC, FX, and Freeform. Recent reports have highlighted Disney's exploration of options to establish a joint venture for its digital and TV business in India as well. This business segment includes the popular Disney Plus Hotstar streaming service and Star India. So wait a second. What? Disney's trying to offload their entire television and a lot of their streaming. Well, we know that that's very capital intensive to make that work. Okay, so this is from CNBC, where they go into a little more detail. He says right here, the CEO, after coming back, I realized the company is facing a lot of challenges, some of them self-inflicted. Yeah, that's kind of accurate. He says they may not be core to Disney. So right here he says Iger said that when he had left the company, he had predicted the future of traditional TV and had been very pessimistic, and has found since his return that he was right in his thinking, adding it's worse than he expected. When Iger last spoke with Faber in February, soon after announcing a major restructuring at the company, he said he felt a sense of obligation to return to Disney, and that his preference was to stay for his 2-year contract. Quote, we've gotten a lot done very quickly, significant cost reductions and significant realignment of the company, Iger said, but dealing head on with some of our biggest challenges. And some of his biggest challenges is how junk TV is right now. And here's actually, I wanted to read you the top comment because I agree with it. Honestly, sounds like a good idea. Focus on movies, parks, Disney Plus. And honestly, that's what everybody wants out of Disney right now. Unfortunately, like I said a second ago, their last 7 or 8 movies have completely bombed, and I mean like lost money almost every one of them. But then add here, Disney pulling back on making Marvel and Star Wars content. So that's like some of the biggest stuff that they have to boast about when it comes to Disney Plus. But, again, we'll see. Time will tell. I actually had, and I forgot, not only that, but there was a tweet that went viral. Why Disney World is so empty this summer. There was someone at Disney World, California, and they had taken a couple of pictures, and it was, now for those of you who have been to Disneyland or Disney World, that place is shoulder to shoulder with like 2-hour-long waits at every ride. But this was there were people there for sure, but it was not overwhelming. And then there's a website where you can check the wait times for various rides at Disney parks, and they were like less than half or less than a third of what they normally are. Massive cut in demand for Disney. So with that said, let's just have a quick look here at Disney stock as we are considering Disney and their earnings in the stock DIS. DIS. Let's have a quick look here. They have earnings coming out here in about 2 weeks, so we'll do a follow-up. But just so you guys can see how Disney is doing, revenue is still up and to the right. Their free cash flow, however, is terrible. It has dropped off a cliff since 2019. Earnings per share, again, dropped off, but coming back. They still got dividends, but this is concerning. They have a lot of cash, but also a ton of debt. Even though their debt is coming down a bit, they're really going to have to, and this probably makes sense why that the CEO, Bob Iger, is saying things like, hey, let's just start selling off things that are not that great for us. And if you guys didn't know, Disney owns like a ton of stuff. And also right here, this return on capital, this basically means at the end of the year, when all's been done and the dust has settled, how much did you actually have left over at the end of the day to reinvest, whether it's dividends or new investments and new ideas and new movies and whatnot. And you can see 2013 to 2018, they're looking great. In fact, really healthy when they get above like 10 to 15%. They're 16, 19, 18. Now Disney's way down here in the single digits. So I could see where the CEO feels like he's got a lot of work ahead of him. So